Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, March 31st, 2016, and this is Trending Markets, last day of the month, last day of the quarter. We do have equities falling just slightly after trading both up in positive and negative territory, but very, very slightly to each direction for the better part of the day. First, S&P is currently trading roughly at 2050, 2051, puts it off roughly 4 points on the day. The high 59, the low has been 47, and as I said, currently trading at 51. Of course, we are long a mini S&P, stops in place. We'll cover both of those along with our upside and target strategy, exit strategy, all on today's Trending Markets. So traders, we're now looking at the market in terms of settlement pricing, 2051.50, down 3.75. Of course, we did enter a long position in the Standard & Poor's Z-Mini earlier this week, and we got in roughly at 2046, 2046. The basis and what was key to us in this move was the fact that not only had we finally gone over that 200-day moving average, but we had also moved above what I had really believed was former resistance, and now I believe is absolutely support, which is a 23% retracement level at 2043. Now, the market has traded to a high of about 2065. You can see that high here. Currently trading, as I said, off about 3.75% or 3.75 of a point, at 2051.50. You can see that slight retracement in this candle here, this being a daily candle. And of course, we finished up the first quarter of 2016 this year. So we did have quietness, I believe, as many large institutional investors basically simply squared their books. Now, we did have one real interesting fact today, and that is that the dollar continues on its downward slide. And traders, really, there's a couple of ways that we want to look at it. One, the dollar index itself, and then also to look at the dollar index as it trades against the euro dollar. Now, first of all, on this daily chart, although we didn't close on the lows, you can see the lows coming in right here on this candle. We certainly closed lower on the day, trading off about 0.22% at 94.62. So traders, compare the most recent activity in the dollar, which is on the top. These are both daily charts in the dollar, in which we have seen this market now slide for approximately 4 days in a row after hitting some very, very strong headwinds at 96.35. That is where we have really pegged our current resistance level, support being not till around 94, even 93.80 based upon this low. And when we look at the euro, you've got 1, 2, 3, 4 the last 4 days in a row. It has been trading strongly to the upside. So you absolutely are seeing a nice key reversal in terms of the dollar, which has been headed lower, and the euro dollar, which has been headed higher. So traders, obviously, when you have a weaker dollar, of course, dollar-based commodities such as oil or gold are going to have some wind behind their back, because you're going to have a positive effect, of course, with that weaker dollar. So, for example, today, when we look at gold moved up about $7 on the day. 4 of that gain is due to normal trading, and about $2.70 is due to change in dollar's weakness. And when we look at oil, you can see that oil throughout the week, although we've seen that dollar really give it a little bit of backwind, so to speak, it was not enough for it to overcome the resistance that it had, trading at about $38 per barrel. When we take a look at the week's activity, that level of resistance that we really believed would hold, which is roughly at around the $40 per barrel price point, seems to be holding. We've been wavering through that area for the better part of a week, but it does appear as though we are going to close below that, and we're closing under pressure in oil with a weaker dollar. So it's really not getting any kind of help from the dollar, except for the fact that it is holding back the amount of losses that it would have occurred if the dollar was neutrally buoyant this week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly review. Maintain your current S&P position. Maintain your current stop. Bye-bye.